Hey everyone, and welcome back to the channel. I'm so excited to dive into today's topic, which is all about getting you started on your path to financial freedom. We know that the world of investing can seem like a daunting, complex maze filled with jargon and scary headlines. You might feel like you need a huge amount of money or a finance degree just to begin, but I'm here to tell you that is absolutely not the case. In this video, we're going to simplify the whole process. We've compiled the top 8 investment options for beginners. These are the tried and true tools that are low cost, easy to understand, and built for long-term growth. If you've been waiting for the perfect time to make your money start working for you, that time is now. So grab your notepad, hit that like button, and let's get you set up to build some serious wealth. Getting started in the world of investing can seem daunting, but it doesn't have to be. For beginners, the best approach is to focus on simplicity, low cost, and diversification. These investments offer a blend of stability, growth potential, and professional management, making them excellent starting points for building long-term wealth. Here are the top 8 investment options for beginners. 1. Index funds, ETFs, or mutual funds. What it is: a type of mutual fund or exchange-traded fund, ETF, designed to match the performance of a specific market index, such as the S&P 500, which tracks 500 of the largest U.S. companies. Why it's great for beginners: instant diversification. Buying a single index fund immediately gives you ownership in hundreds of different stocks or bonds, spreading out your risk. Low cost. They are passively managed by a computer algorithm, resulting in very low management fees, expense ratios, compared to actively managed funds. Reliable returns. Historically, broad market indexes have delivered strong returns over the long term. 2. Exchange-traded funds, ETFs. What it is: a basket of securities like stocks, bonds, or commodities that trades on a stock exchange similar to individual stocks. Index funds are often structured as ETFs. Why it's great for beginners: ease of trading. You can buy and sell them throughout the day at market price, just like a stock. Variety and flexibility. You can find ETFs that track specific sectors, tech, healthcare, or even entire portfolios. Low barriers to entry. Many brokerage firms offer commission-free trades on ETFs. 3. Robo-advisors, automated investing. What it is: a digital platform that uses computer algorithms to build and manage a diversified portfolio for you based on your financial goals and risk tolerance. Why it's great for beginners: minimal effort. It takes the guesswork out of investing and asset allocation. Low fees. Management fees are significantly lower than traditional human financial advisors. Behavioral coach. They automate processes like rebalancing and dollar-cost averaging, helping you stick to a disciplined strategy. 4. Individual stocks, blue chip focus. What it is: buying a small share of ownership in a single, publicly traded company. Why it's great for beginners with caution: high growth potential. The potential for returns is greater if the company performs exceptionally well. Focus on blue chip stocks. Beginners should focus on large, established companies with stable earnings and a long history of paying dividends, known as blue chip stocks, rather than volatile, unproven ventures. Crucial note: individual stock picking is generally higher risk than funds and should only make up a small, experimental portion of a beginner's portfolio. Number 5. High-yield savings accounts, HYSAs. It's a type of savings account usually offered by online banks that offers a significantly higher interest rate than a traditional bank account. Why it's great for beginners? Safety and liquidity. Your money is easily accessible and typically FDIC insured, up to $250,000, meaning there is virtually no risk of losing your principal. Emergency fund. It's the ideal place to keep your emergency fund, 3 to 6 months of living expenses, separate from your growth investments. Beats inflation, sometimes. The higher interest rate helps the value of your cash keep pace better with inflation than a standard checking or savings account. Number 6. Certificates of Deposit, CDs. What it is? A type of savings product where you deposit a fixed sum of money for a fixed period, the term, and in return, the bank pays you a fixed interest rate. Why it's great for beginners? Guaranteed returns. You lock in an interest rate for the entire term, providing predictable, guaranteed income. Low risk. Like HYSAs, they are typically FDIC insured, up to $250,000, meaning there are no risk of losing your principal. No market volatility. Their value does not fluctuate with the stock market. They're best for savings goals with a specific timeline. For example, saving for a down payment in 3 years. Number 7. Retirement accounts, 401k or IRA. What it is? Tax-advantaged accounts specifically designed for saving for retirement. A 401k is typically employer-sponsored, and an IRA, individual retirement account, is one you open yourself. Why it's great for beginners? Tax benefits. Contributions and/or growth are either tax-deductible now, traditional, or tax-free later, Roth, which supercharges your long-term growth. Employer match, 401k. If your employer offers a match, it's essentially free money. You should contribute at least enough to get the full match. Long-term focus. They encourage the disciplined long-term mindset necessary for successful investing. Number 8. Real estate investment trusts, REITs. What it is? Companies that own and often operate income-producing real estate. You can invest in them by buying their shares on a stock exchange, similar to an ETF. Why it's great for beginners? Exposure to real estate. It allows you to invest in property without the enormous capital or hassle of being a landlord. High dividends. REITs are legally required to distribute at least 90% of their taxable income to shareholders, often resulting in high dividend yields, regular income payments. Diversification. They add another asset class to your portfolio, real estate, diversifying beyond stocks and bonds. Key investment principles for beginners. Before you start, remember these essential rules. 1. Begin promptly. Time represents your most valuable resource. The power of compounding, earning returns on your previous returns, works best over decades. 2. Pay off high-interest debt. The guaranteed return from paying off a credit card with a 20% interest rate is almost always better than what you can earn in the market. 3. Establish an emergency fund. Keep 3 to 6 months of living expenses in a secure, liquid account like a high-yield savings account. Never invest money you might need soon. 4. Invest consistently, dollar-cost averaging. Instead of trying to time the market, commit to investing a fixed amount of money at regular intervals, for example, every month. This strategy is called dollar-cost averaging and reduces the risk of buying only at market peaks. 5. Understand your risk tolerance. How much can you afford to lose without panic selling? Your risk tolerance should guide your choices. A young investor saving for retirement can generally afford more risk, more stocks or funds, than someone nearing retirement. Would you like me to elaborate on one of these investment options, such as how to start investing with an index fund? All right, everyone, that wraps up our look at the top 8 investment options for beginners. I hope this breakdown has demystified the process and shown you just how accessible building wealth can be. Remember, the single most powerful decision you can make is simply to start. Don't wait for the perfect moment or the perfect market conditions. Choose one of these beginner-friendly options, whether it's an index fund, a robo-advisor, or just maxing out your 401k match, and be consistent. Investing isn't about getting rich quick. It's about disciplined, long-term growth and harnessing the magic of compounding. If you found this information helpful, please give the video a thumbs up and subscribe for more practical financial steps. Let me know in the comments, which investment option are you going to start with this week? We love hearing about your journey. Thanks for tuning in, keep learning, keep growing, and I'll see you in the next video. Happy investing!